Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 13th of May. Starting off with Dev Clever Holdings, which is trading in the wake of a announcement from the company earlier this morning. We've seen the shares bounce, sort of cork in water type bounce off the floor of this rising trend channel from January at 7 pence. And while we hold above that on an end-of-day close basis, looking for further significant upside, that would be to the top of the channel at 12 pence, and that could be seen as soon as the end of next month. At this stage, only really back below the 20-day line. That's down there at 6.3 pence, really upsetting the ongoing recovery argument for the shares. Not too many outright bullish situations around today for some reason, but it leaves us to look at perhaps future opportunities. One of them looks to be Egdon Resources, where we've got to break out of this falling wedge formation, which has been in place since the end of March. Resistance line break there at 1.8 pence, and an end-of-day close above that particular level could allow the shares to get on a journey to retest last month's resistance around the 2.4 pence area over the next few weeks. Stock which has been a private investor favourite almost since the start of being on the market is Emerson. Here you can see that shares made a decent recovery since the March lows below 2.5 pence, rising within a trend channel from January, with its resistance line projection heading towards 6 pence, and that target valid while we hold above recent support just shy of the 4 pence level. End of day close above the late April high around 4.7 pence should be a decent trigger, hopefully later in the week, for a move towards the aforementioned 6 pence area. As I said, not too many heavy, hard-hitting bullish stocks at the moment, so we're looking for potentially new situations. One of them is Iconic Labs. Here we've got a potential breakout of this falling wedge that's been in place for the last month or so. You can see that we just need to get an end-of-day close really above the top of the wedge at 0.03 pence to allow the stock to possibly retest April resistance around 0.6 pence. Stop loss obviously back below the latest swing low there at 0.02 pence. Onto a stock which has offered a somewhat bumpy ride, something you'd expect from a rather illiquid situation as we have here at Marichal Capital, but we've still got this rising trend channel from November in place, and as long as the shares hold above the 50-day moving average at 0.75 pence and the floor of the channel, we're looking for a price target here as high as 1.6 pence, hopefully by the end of next month, given the setup that is in place at the moment. Stock which is relatively new to the Bulletin Board Heroes, so here we have a repeat situation. Malvern International. Here we see the way that the shares earlier this week broke, or last week in fact, broke the resistance line there from December, running through about around the 0.4 pence level. The view at this stage is that we're in a bullish consolidation, at least while we hold above the 50-day moving average at 0.35 pence. The top of that broadening triangle at 1.75 pence could be the target over the next couple of months. Star of the show today, at least earlier on in the day, was Motive Bio. I think the last time I looked at the shares, I was suggesting that we were in a mid-move consolidation. I think that was around 0.9 pence. We spiked up to 1.75 pence earlier today. And the view at this stage is while we're above resistance on the way down at 1.1 pence, we're looking for not only a retest of the initial May high at 1.8 pence, but also potentially by the end of next month a move to the top of this broadening triangle from the beginning of October up to 3 pence. I'm sure that will cheer people up. This stage only back below the 200-day line at 0.82, really upsetting the bullish looking scenario there on Motive Bio. Safe Style is next, and again a bit of an early bird situation, hopefully one that won't fizzle out. Here we've got a break of this triangle formation from last month through the 21 pence level. We made good progress, especially above the 50-day line at 24 pence. There is some resistance there at 28 pence, so if you're cautious on the shares, maybe wait for that to break. But if we can get through that, then we're looking at support on the way down around 40 pence as the next destination for the stock. Stop loss back below 20 pence should probably cover it. One of the rare farmers that's still going from strength to strength is Tiziana. Here we've got this slow breakout within this triangle at the moment, but a slow breakout from recent lows there. End of day close above 80 pence is probably the trigger on the big breakout that some in the market are expecting. That would take the stock up towards £1.20, which is the top of this rising trend channel from March. This stage only really back below 60 pence, and the floor of that channel really delaying the potential upside scenario. We've really broken the main near-term resistance around 70 pence already, so it's just 80 pence to be broken at this stage. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.